Let me turn towards all of the action in Parliament. The Lok Sabha today finally managed to discuss inflation. Finance Minister Nirmala Sitharaman trained her guns on the opposition, responding to the charges levied. The minister said that India is doing much better than most nations and remains the fastest growing economy. She also dismissed fears of any recession or stagflation. Listen in.
आज सही में माननीय सभापति हर गृहिणी के आंसू बह रहे हैं, इतनी कमर तोड़ महंगाई आपने कर दी है। पंजाबी में कहते हैं कि पहला तो मुछ दी लड़ाई ने मारत्या, दूजा यार दी जुदाई ने मारत्या, तीजा रब दी खुदाई ने मारत्या और बाकी जो बचा से महंगाई ने मारत्या।
मैं कहती हूं कि ये सब्जी अगर मैं कच्चा खा जाती हूं क्योंकि ईंधन नहीं मिलता है तो वही कच्चा खाने का बात कर रही हूं, क्योंकि एलपीजी सिलेंडर ये चंद महीनों में चार बार एलपीजी सिलेंडर का दाम बढ़ा। It is important for us to first of all as Indians appreciate that our people have gone through this pandemic, Delta wave, Omicron wave, and after that the way in which global value chains have hit us. But in spite of that, because of the various steps taken by the government and also by the Reserve Bank of India, we are remaining much better than most countries.
All right, so that's the counter. Yes, there is inflation, but we're better than others. To speak more on this, I'm joined now by Rahul Bajoria, Chief India Economist at Barclays, Mythili Bhusnurmath, Consulting Editor, ET Now, and K Joshi, Chief Economist, CRISIL. Welcome to all of you. We played out some of that action in Parliament, and of course, that's some of the fun part. That's the politics of it. But let's talk about the facts. The claim essentially, Rahul, let me begin with you, is that yes, India is suffering from inflation, but we've seen higher before. Double-digit inflation is something that we have seen for a few years, and it's better than others. Would you say, relatively speaking, that the facts support that statement?
I think so. I think, when we sort of take a step back and think about what has happened in the last 3 years, I think the government, does deserve some credit for smoothing the inflation cycle relative to what the rest of the world is experiencing. If you sort of look back in 2020 when fuel taxes were hiked, India did have, more inflation, relatively speaking, compared to others when commodity prices had collapsed. In some ways, the counter-cyclicality of fiscal policy through tax cuts has helped at the margin in sort of breaking the momentum of inflation. But then when you sort of compare levels, India is seeing relatively high inflation, no doubt about it. But then, to the rest of the world, the deviation from the targets that we have, whether it's the RBI or what we have done on average, it's a deviation is smaller than what most other central banks are currently experiencing. Hence, that could be seen as a validation of, what the Honorable Finance Minister said in the Parliament today.
Okay. The impact on Indians is the question, because frankly, when you take it to what people are feeling, I don't think really anyone cares that 8 years ago I suffered 11%, so now 7% is fine, so what? I mean, that's all the politics of it. I want to understand, Dr. Joshi, because the counter is that we are still subsidizing food for the poorest of the poor and those in need. Is that, I want to understand if that's enough really to cushion the blow of inflation.
Well, I think if you talk of the poor, what hits them most is food and energy, because that has a larger component in their consumption basket compared to the upper income brackets. And I think some cushion has been provided by providing free food grains to a large number of people. I think, and we've been fortunate to have good food stocks which could be released, and it could cushion the blow. But still, I think even after that, I think the inflation still seems to be hitting the poor more because of the nature of inflation, which is food and energy driven at the current juncture.
The question about energy inflation, Mythili, and that was brought up, that the big taxes, the big quantity of taxes which have been imposed on petrol and diesel, and this is something we've discussed in the past. So the counter to that was that we've spent all of this on developmental needs, much more than the previous government, etc. But in real terms, is there more that could have been done and can be done in terms of the impact that high energy costs have on the average Indian?
Well, as far as energy costs are concerned, there's not very much that the government can really do, given the fact that we import more than 80% of our oil requirements. And the fact is that oil prices have gone up. We also had the dollar first weakening and strengthening, etc. As a result of which, when dollar strengthens, means the rupee weakens, and that pushes up the price of imported oil. So the high price of oil and the fact that the rupee weakness adds to the imported inflation. So as far as energy prices are concerned, the government has cut back on its excise taxes, but that doesn't really help very much. What could have helped, and of course now we're speaking after the event, had monetary policy been tightened a little bit in advance. We are seeing the RBI now tighten monetary policy, but monetary policy acts with a very long lag. So had the RBI acted a little earlier, we would still have seen high inflation, but not perhaps as high as we are seeing today. But that I think is all in the past, and we'll have to see what happens going forward. We've seen some improvement in commodity prices, some softening. If that sustains, perhaps energy prices will come down, and that should certainly help. But I entirely agree with DK that since food inflation is so high, that is what is hurting the poor in the country so much.
The other big question, Mr. Joshi, is whether we are going to see a cooling off of inflation. And, Raghuram Rajan, etc., were quoted on this. We've seen edible oil prices come down. Commodity prices seem to be cooling to some extent. So can we hope for better, or is 7% here to stay for some time?
Well, I think what we predict is that inflation will gradually come off. And I think our forecast for the last quarter of this fiscal year is 6.7%. And that's premised on assumption that oil prices will remain range bound, which is, I think, $105 to $110 a barrel, which is still high, but it is definitely lower than what it was a couple of months back. And commodity price trends are a little encouraging. I think we will see somewhat softening of manufacturing prices as well, to a little extent. But I think what has happened globally is that despite the decline in prices, when we measure inflation, it is year on year. Inflation in this month compared to the same month last year. And in those terms, I think if you look at agri commodities globally, I think inflation is still in double digits, except for rice, I think, where we have a lower inflation than, I think it's -3% in June. So I think for most of the commodities, despite decline, the level of prices continues to remain quite high. So the inflation will come down, but it will come down very gradually. And I think it needs to be constantly monitored. Biggest risk, I think, which could play out is on the agriculture front. I think if the monsoons do not pick up or normalize in the areas which are deficient right now, I think it will have an impact on paddy production. And we are already seeing some of the area which would have gone to paddy being shifted to other crops. And I think and India is the world's largest exporter of rice. So clearly, I think there are mixed trends, but overall, compared to what the situation was 2 months back, I think the inflation fears have somewhat lessened. They haven't gone away.
Yeah. Rahul, you would agree with that? That inflation fears have somehow lessened? And in your view, what further steps can be taken on a policy level to ease the pain? Of course, we have monetary policy coming in, and we'll see if there are more interest rate hikes. That's widely expected. But on a policy level, what else can be done?
So I do agree with Dr. Joshi's assessment that, we are going to see some moderation, at least in the momentum of inflation, as global commodity prices come off and they are gradually passed on. I think one thing that is important in the current juncture is that, a lot of the smoothing on the fiscal side, say, for instance, in edible oils, was done through tax cuts, import duty cuts. There would be a temptation to reverse some of them. I think it's important to actually allow for the pass-through to take place early, at least in the early part of the cycle, so as to, try and stall the momentum of inflation, because that helps in controlling the expectations build-up process. I think over the slightly longer term, as Dr. Joshi rightly said, this is more of a price level shock, so we are not going to see price levels come down quite dramatically, but then certainly the rate of inflation should trend lower over the next few months, effectively sort of following the decline in imported price pressures, which were primarily responsible for the build-up as well, at least for the large part of it at the beginning of the year. Now, in terms of what else can be done, I think monetary policy, the transmission this particular cycle has been a lot faster. So hopefully that also will help anchor inflation expectations and prevent the second round effects, which I think is what the RBI is trying to tackle through its preemptive rate hiking cycle.
Absolutely. Thank you so much to all of you for joining us on the discussion today. So inflation may be the political story of the day, but it's going to be an economic phenomenon and unfortunately something that all of us will continue to experience for quite some time to come.